The Forex market never sleeps, and neither do I. So let's go and see what the charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis on this channel. So make sure that you subscribe, and I will see you on the charts. In today's video, I want to speak about CHF JPY. Now, why do I want to speak about CHF JPY? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, first providing a complete multi-time frame top-down analysis. By looking at the technical aspect, we will then go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials and the biggest speculators are doing in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that at the moment we are testing a quite strong area of previous monthly resistance, which was obviously acting as resistance here, which the market broke to the upside. And after the break above this resistance, this previous resistance was turned support here. The market tested its zone and started rejecting it to the upside. So here on the monthly, everything seems quite bullish. We have a test and rejection of previous resistance turn support, and we can expect more continuation to the upside, possibly even for the market to create a higher high. Dropping down on the weekly time frame, what do we have? Now here on the weekly, we have a strong impulse and correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market, in fact, has first tested the 50%, broke above the 0.382, currently tested and rejected also the 0.32. So basically, we are moving step by step, testing the Fibonacci levels, which is usually exactly what the market does when it wants to create the continuation to the upside. In this case, for the completion of this impulse correction and impulse pattern to the upside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. Now, if we drop down on the daily time frame, what do we see? Now here on the daily, we can see that after creating this correction, we had this horizontal accumulation phase in which we went from creating lower lows to creating higher lows. And in fact, I did make a full breakdown of CHF JPY when the market was around this area, explaining other reasons for which we expected the market to provide a rejection to the upside. And in fact, that is exactly what the market did. And by the way, I will link this previous analysis in the description so you can go and check it out for more free education. Now, at this point on the daily, what we have is an impulse, and it seems like the market has also just started a correction with the creation of this red candle here. Now, after an impulse, as we already did on the weekly, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a 0.32 and 50% Fibonacci retracements lining up exactly at this area that we do expect this market to go and test before then printing a potential rejection to the upside. Now, if we go and see what we have when it comes to the COT data, so the commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market are doing, what we can see here on the CHF is that with the last reports, net positions have been increasing. We went from having minus 20.6k net positions all the way up to having minus 8.3k net positions. So clearly we're getting an increase, and that is overall long-term bullish for the CHF. We could even start shifting to the positive side of the net positioning. And if we go and see what we have on the JPY, we can see how the JPY is still in a pretty negative net positioning. We obviously got increase from minus 107k to minus 53k. However, minus 53k is still very negative. We have 73k shorts compared to only 20k longs. And even though we are seeing shorts getting closed and longs getting opened with the last report, we can see how this had already happened here with 8.1k longs getting opened, but then we got with the next reports a lot of shorts getting closed. Actually, more shorts getting closed than more longs getting closed than what we're getting opened here. So overall, the JPY is still pretty weak with minus 53k net positions. So if we get a correction, that would be great, because at that point we could definitely have more longs added on the CHF, more shorts on the JPY for the continuation to the upside. So the way in which we will be approaching this with students is as usual being reactive and not predictive. If we will have a correction to this area, when the market will reach this 0.32 and previous resistance turn support inside of here, with students, we will be monitoring price action from an intraday perspective, so 4 hour and lower, because the monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. So after the break on the retest inside of here, we will be monitoring price action from an intraday perspective, waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And if the market will shift from an intraday bearish to bullish market and provide to us one of our valid entries, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to potentially complete the impulse correction impulse pattern to the upside that we have previously identified on the weekly time frame. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.